Welcome back to Navigate Your Wealth. I'm Rebecca Powers. We were having a conversation, Karen and Sam, about that snapshot that everyone, and I can imagine how wonderful it would be to have everything on just one page, what you have, what you may need. What do you do with that snapshot once you have it?
Right. Listen, that snapshot is just a moment in time. And there's a few things that we can do with it. One, it gives the client the history of where they've been, right? Every time we do a strategic planning meeting with them, which is on an annual basis at a minimum, sometimes clients want to meet more often, we want to be available to them. But at a minimum, once a year, we sit down, we put all of the assets back on your model and look at the progress of what's happened over the last year. Because you have that snapshot, it's the motivation that a lot of clients need to keep going, right? It's that encouragement to say, the things that we are doing are helping us accomplish our goals, our long-term goals. But the other thing that it does, it gives us an opportunity to say, okay, here are the assets that they have. Let's identify where the risks are that they're exposing themselves to right now. And ultimately, how do we get to the end goal to create that retirement income that they need? And for us, that end goal is the Power of Three strategy. Now, the Power of Three is what we utilize to cover three important keys in retirement. One, you need growth, right? You want to be able to keep pace with inflation. You want to be able to continue to grow your assets. The second thing is you need income. So we've got to cover your guaranteed expenses with guaranteed income. And then the third piece is liquidity, because your money can't be invested if you're also hoping that it's liquid.
That's right.
And so we utilize some tax-free strategies like cash value life insurance to create that liquidity piece. And so when we look at all of the assets on your model, we say which assets fall into which bucket of your Power of Three, and where do we need to fill the gaps?
You know, when we're looking at that, Samantha, and I know we've said it on other shows, but we have come to believe that money should have job descriptions.
Yeah, I love that.
And it has so simplified things for our clients, but it also ties in beautifully with our Power of Three model. Because as Samantha was describing, those three components, guaranteed income, liquidity and access, and growth, those are job descriptions, right? The growth is you want your money to grow. The guaranteed income is you want to have some income, and the access and liquidity is you need to have your money accessible. And so the cash value life insurance and the other two things are able to do that. So when we're looking at that GPS, we know what's above the line, below the line. We've talked about that on previous shows. Anything above the line is in a paper asset, meaning it fluctuates in value on a daily basis. It's not real till you sell it. Right. When you get your 401k statement in the mail, assuming you haven't signed up for e-documents, if you actually get a paper statement, the number on that page is actually wrong the day you open it up.
Why?
Because the day it was printed, it was exactly correct. Hopefully it went up in the 7 days it took to get to your mailbox.
But later
it could have also
not.
gone down. That's right. That's right. But the fact of the matter is that's why we call it a paper asset. It's not real because you haven't sold it yet.
Gotcha.
Real estate is above the line. Now, you asked a question during the break about, does my primary residence go on my GPS model? And the answer is no.
It doesn't count as an asset because you couldn't take liquid.
Well, you have to have a place to live.
Right.
Okay. But if you have rental property or if you have a second home, that would go on the model. And again, it would go above the line because it's a paper asset. You know, it could be worth $1 million. You know, next year it could be worth $800,000 or $1.2 million. It's still a 4-bedroom house. You didn't lose any bedrooms. Yeah. But it either went up or it went down or it stayed the same in value. Below the line is those assets that don't fluctuate in value. Remember we said if you put your money in the bank, they give you point nothing, but if you come back a month later, it's still there, right? So that's what we really look at. So now on the GPS, we're identifying where those assets are and what strategies we need to try and go after to then accomplish those hopes, dreams, and desires. So if we're looking for income, we start there.
And when you talk about the jobs, I think the best way that I understood it, which is really neat, is if you want that $1 to grow, you want to leave it there to let it do its job to grow. How in the world could you take 50 cents out to pay your bills and expect that poor little dollar to still do its job?
Exactly.
And I love the way that you all, you know, explain it like that. So back to the snapshot. When you first meet with people and they see that, is it aha moments almost every time for people?
You know, I think that there's a few aha moments that come from it. A lot of times people don't realize how much wealth they've actually accumulated.
Yeah.
And so I think for a lot of people, there's a moment of pride.
Pride, yes.
It's really nice to be able to show that to them and say, look, you've worked really hard and this is what you have. Like, you're going to be okay.
Yeah.
You know, but the other thing that I think is really nice for them is that they can actually see each individual thing and the type of treatment that it's going to get. Is it taxable or is it tax-free? Is it exposed to risk or is it more conservative? Again, when we talk about risk, a lot of people's default is the market. And so when they're thinking about the market, they've used, and our industry loves a good abbreviation, but they also love terms. You know, this is conservative, this is moderate.
Yeah.
What in the heck does that
Exactly.
even mean?
Be diversified and you'll be fine.
Listen,
like, okay.
I need to know a dollar amount, like how much am I losing or how much am I gaining? And so for our clients, they're able to actually see when it's on the model, these dollars are at risk or these dollars are safe. And I think that that really helps them to understand it's not just, oh, I have this 401k or, oh, I have this, you know, inheritance from my father.
Right. So the snapshot, and then you said risk, and so that's why you added that risk analysis, because it shows exactly how risky their money is.
Exactly. The other thing, and I didn't mention before the break, but we do a Social Security analysis and an income analysis. And so when I'm looking at this GPS, the first thing I want to ask is, what are your fixed monthly expenses month over month?
Okay.
And a lot of times they don't know. So we actually have a homework assignment and we give it to them and we say, okay, I want you to go figure out those bills that show up every month. Okay, let's make a list of those things. And then once we get that, then we determine what income do we have that's guaranteed to show up every month also. There's only 3 guaranteed income sources. One is a pension. Most people don't have that today. Those that do, congratulations.
Yes.
The second is Social Security. Most people are going to get that. Sorry, you may or may not.
It's like in a distant future for me.
Not good for you, sister.
And the third is the guaranteed income annuity, which is really one of the greatest guaranteed solutions that we have. So we look at what their guaranteed expenses, those expenses which we know are showing up, and then we see if there's a gap. It's very simple. Is there a gap?
And how do we fill it?
And how do we fill it? So then we go to the assets and say, which of these assets would be better suited in a solution such as a guaranteed income annuity to fill that gap?
And since you brought up the word annuity, how is that different from life insurance?
They're both with an insurance company, so they both get a bad rap because everybody thinks the insurance company is bad. But I got to tell you, the annuities can do something that no other product can do. You can't get the same thing out of a bond, out of a stock, out of a CD or anything. An annuity is a relationship or a commitment and a contract with an insurance company. So it's between you and them. And there are many different types of annuities. There are accumulation annuities where you're just getting it's like a certificate of deposit, but with an insurance company.
Okay.
And we have some wonderful options right now for multi-year guaranteed annuities. I don't know if we have that slide still to help people see. Oh, we do. That's fantastic. So you can see right now in a 2-year or a 3-year guarantee period with an insurance carrier. And again, because we are independent, we are not restricted to just using the company that we work for. We can use any of the carriers. And this is one of the carriers that offers a rate of 4.2% for a 3-year commitment. It's no different than signing up for a 3-year CD at the bank, but you are not getting 4.2% on a CD at the bank these days. So that is one of the options.
So why wouldn't you do the 7 years? Because you had said to me before you would just do 2 or 3. Why would you not get the higher interest rate and go more years?
Because I think in 7 years that rate could be higher. So I'd rather take a 2-year or 3-year, and when that matures, have another option to jump into that may be at 5.2 or 6.3.
Gotcha. So
if interest rates
never
continue to go
fixed.
up.
Yeah. It's not always
No, it
fixed.
stays for the period of time.
For just those 2, okay.
So if I went with the 7-year, it wasn't high enough, in my opinion.
Gotcha, then you've lost out. Gotcha.
And this is the thing. You said options.
That's right.
That's our goal. That's our end game for all of our clients. We want to give you options. So if you're looking to make sure that your retirement has the options you want, pick up the phone now and call the number on that screen, 855-348-3073. We would be honored to have the conversation with you to figure out what options will give you the retirement you're looking for.
Absolutely. And stay with us more right after this.